The Dow has hit record highs, and one of the things fueling that trading is the retail investors. The retail investors have not been in this market when we had the financial crisis. Everyone left. They are back in it. They're back in it strong. I have with me Managing Director Nicole Sherrod from TD Ameritrade. TD Ameritrade has this very interesting index, and it's called the Investor Movement Index. And what this is doing is tracking the retail investor. It hit a high in February. So let's talk about that. What has brought them back in?
Yeah, that's absolutely right. So TD Ameritrade is the largest in terms of retail trades per day. We've got over 6 million clients. And what this index does is it looks at their trading behavior in order to ascertain, are they getting more bullish, less bullish, bearish? And what we saw in February is we hit a record high in the IMX. So they haven't been this bullish, well, it wasn't a record, but they haven't been this bullish since June of 2010.
Now, a lot of the traders that I talk to down on the floor of the stock exchange, they say, gee, when the retail investor gets in, it's time to get out. Having said that, they wanted the retailer to be involved in the market for years after the financial crisis. They got burned. They didn't want in. Now they're in. Is this a good thing that we've got these people invested again?
Well, absolutely. And what I would say there is this index has been up over the course of the past 7 months as the market's gone up. So retail has been participating in this rally. And really the whole reason that TD Ameritrade created the IMX was really to debunk that notion that there's Wall Street, which is the smart money, and Main Street, which is the dumb money. We disagree with that, and we think that this index helps to show that as the market's been going up, our retail clients have been getting increasingly more bullish and posturing their portfolio that way as well.
Is there any certain sectors that you're seeing them really go into?
I would say when we look back at the results from February, it was more about bottom fishing. That was definitely a major theme that we saw. Apple notably is kind of the darling of Main Street. They just love that company. And as it hit some lows, retail seems to be thinking that they've hit a floor, that Apple's hit a floor. So we saw a lot of people bottom fishing there. The same thing also with Facebook.
Oh, that's really interesting. So now that we're looking at this with these retail investors bottom fishing, that's got to be good for TD Ameritrade that you've gotten Joe Sixpack and Betty Bungalow back to the trading desk.
Well, certainly a big part of our revenue, a key driver for ours, is transactional trade revenue. So certainly the Investor Movement Index, or the IMX, also looks at how clients are levering up in their portfolios or using more margin. So that's a revenue driver for us as well. And what IMX is saying is that both of those things are happening. So yes, a good thing for TD Ameritrade. What I would say for us is the best thing is always, as the market's moving up, clients are getting more bullish. We want to see our clients in line with the movement of the broad market.
Right, and of course you want to see your clients make some money. So there you have it. They're trying to debunk that myth that when the retail investor gets involved, it's a bad thing. That's Nicole Sherrod from TD Ameritrade, and I'm Debra Borchardt with TheStreet.